You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO. This Week in Futures Options, a program where the name says it all. We break down the week that was, and indeed still is, from a futures options trading and trending and analysis and unusual activity perspective. Break down the volatility, the skew, the volume, all that good stuff, and a whole bunch more. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Coming at you now for our second episode of the new year. Fun to be breaking down all the fun goodness of 2021 here on TWIFO. I want to remind you here at the top of the show, if you like what you hear, this show, anything we do here on the network, keep those reviews, keep those comments coming in your platform of choice. Could be even where you download our app. I know a lot of you like our app via iOS and Android. Wherever you do get those, leave those reviews so it helps new folks continue to discover all this content. Of course, keep those questions coming too. We do love to hear from you folks out there. And let's see who we're hearing from on the old program today. Going back out now to the newly christened for 2021 FTSE Russell Studios, where I am proud to say I'm joined once again by my old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to TWIFO, and how are things cooking in the FTSE Russell Studios, sir?
We're doing great here, Mark. I hope you can hear me loud and clear, but we're doing well out here in the FTSE Russell Studios out in the western suburbs of Chicago.
You sound fantastic. Well. You sound like you're right next to me, sir. That studio upgrade couldn't have come at a better time, sir.
I love this. It's fantastic equipment, and it's working well. And I'm excited to be here today.
You've created a monster now. You're going to start creating your own shows out there pretty soon. It's going to be the whole FTSE Russell network. And next thing you know, my lawyers will be contacting you.
I would never cheat on you, Mark.
In the meantime, sir, let's kick it off the way we always do with our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers. We break down the biggest movers to the upside and to the downside, what's trading over there at CME Group. Remember, while you're listening to the show, you can, of course, head on over to cmegroup.com/TWIFO, TWIFO, or /TWIO. That also works. Both of them will get you to our This Week in Futures Options report, so you can see all these numbers for yourself, the change in skew, the change in volatility, the most active contracts, all that hot stuff, and a whole bunch more. And Sean, you know what I'm going to ask you now. We've been doing this for a little bit. Where should we begin our journey for this second week of 2021, sir? To the light side, or perhaps, dare I say it, to the dark side?
Let's go dark. I don't believe I'm saying it, but let's go dark.
Wow. I almost didn't even ask you because I thought for sure I knew what your answer would be. But look at you mixing it up here. New year, new leaf.
Throwing you a curveball.
New year, new leaf, sweet new studio out there. All sorts of things happening over there in the land of FTSE Russell. All right, we're going dark, listeners. Buckle up. And actually, we're looking at this scan, listeners, and it is one of the more egalitarian scans we've seen in quite some time. Pretty much equidistant to the upside and to the downside in terms of how many names we have on both. If you remember some of our recent shows, we were hard-pressed to find any red on the entire panoply of trading products over there at CME. So a little bit more egalitarian out there. Pretty much 50-50 red and green, which, you know, obviously green is good for people, but maybe argue a little bit healthier market with a little bit more of an even mix out there. Number 5 to the dark side this week, we've got Palladium off 4.25%. It was number 1 to the dark side last week, a little over 5%. So a rough couple of weeks for Palladium. Staying in the metals for a little bit here. Number 4, Platinum, off nearly 6%, 5.92%. Number 3, Silver, off over 6%, about 6.25%. Numero dos, Sean, your old stomping grounds out here. The Eurodollar is off 7.5% this week. Number 3 in the same direction last week, off about 2.5%. So interesting couple of weeks out there in the rate space. And number 1 with yet another aggressive bullet, Lumber, off nearly 9%. I wish there was some options activity for us to parse out there in lumber, listeners, because it's been dominating our charts to the upside and to the downside for quite some time. And yet, there's not much really to talk about out there aside from the swings in the futures. So, unfortunately, it probably won't be on our rundown again today, but it's an interesting contract. It's a beefy one, and it's moving quite a bit, yet, unfortunately, not making the list, at least for what we're going to break down today. Let's go to the light side now. You got to go a little bit beyond the top 5 to find the FTSE Russell. Is actually at number 11 this week. It's still having a strong week, up 2.6%. It was the same pretty much rank at number 5 last week. It was up nearly 5% last week, 4.87%. So strong couple of weeks in small cap land. And then the bottom of our top 5 here, rough rice up 4%, 4.02 to be precise. And then we've got wheat up 4.4%. And then soybean meal up 5.73% for number 3. Number 2, Casey wheat. So staying in the ags here. A little bit of a trend here as well. Metals to the dark side, ags to the upside. KC wheat up 6.18%. And number 1 to the upside, we've got corn up 7.39%. So strong week here for the ags. Sean, since we're talking movers and shakers, what do you think we mix things up a bit and add an addendum to our movers and shakers report this week that has been requested by many listeners? What do you think, sir? Should we do it?
Yeah, let's go for it. Come on.
All right, let's do it. We're mixing things up here.
Listeners are the king of this program, so absolutely.
Mixing things up here in this crazy new year of 2021. You've been asking for a while for a little bit of a volatility breakdown, a little bit of vol moving and shaking as well. You can do it. There are a variety of different ways to do it. Usually you have to have some sort of constant maturity view and see how that has changed over time. So you can find that if you have the premium version of the Quick Strike over there as well. You can check these out for yourselves. You can get a top 10 declining and a top 10 advancing in terms of vol for the week. Maybe you can guess a little bit what the declining are out here. Again, you're going to see different changes in vol in different maturities within the same product. And that's exactly what we're seeing for pretty much our top 3 declining this week. It's the Bitcoin 30-day, 60-day, and 90-day right in a row there. The 30-day is off almost 25%. If you've been listening to our Crypto Rundown program, you know the vol out there was around a 150 with triple digits. So it's going to move quite a bit. So the 30-day vol coming in quite a bit. The 60-day vol off about exactly 20%. And the 90-day vol off about 17% off there. So big change out there in terms of vol. But there's a lot of vol to come off there as well. It's kind of hard to maintain those super lofty levels. I think ETH at one point was threatening 200%, 189, 190% out there. So the levels of implied volatility in the crypto space are kind of off the charts. Not as much of a move in the other direction this week. Mostly some incremental upside there in the Eurodollar. So not as exciting of a story on the advancing, but declining. Certainly an interesting one that we'll keep an eye on. And Sean, let's mix it up again. We don't get the chance to talk ags as much as I know a lot of the dedicated ag heads listening out there. And you reached out to us, and we know who you are. You want more ags on the show. Well, I think, Sean, we can oblige them this week because we've got corn dominating the top spot here to the upside, up 7.39%. So what do you say, Sean? I think we should kick things off with a little bit of the old ag, sir.
Look at the top five. It's all ags. So absolutely, ags have earned their spot in the top slot today.
I know you spent some time in the Eurodollars pit. Did you ever swing by the ags in the wheat pit or the corn, anything like that, sir?
I was on the CME, so those products weren't over at CME at the time before.
That's right. That's
of the Board of Trade.
Pre-merger. That's right, sir.
But as a runner, I was sent to the rice pit a couple of times at the CME, and there was no rice pit. So of course everybody was on the joke. They sent you to the four corners of the exchange where. It became quite humorous for the newcomers on the floor.
Yeah, the thing on the SIBO used to be go look for a box of upticks. I guess every exchange had their own. I guess CME was go look for the rice pit. They all had their own unique ways to mock the newcomers as we head right on into a little bit of the old ags.
It's time to get our hands dirty exploring the latest options trades and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, we don't get to hear that drop often enough here on the show. Welcome to some ags. And we're going to kick it off in the land of all things corn. Coming into showtime, we got that front future at about a 534 even, listeners. So if you don't follow the corn market, that's where we're setting up base camp out here today. In terms of the most active contract out here this week, it was the March contract. It's got about 36 days to go, doing about 35.6% of the paper out there. So that's where we're going to hang our hat from an analysis perspective. Coming into showtime, the vol out here is fairly rich, 33.11 out there. The ags historically haven't been huge monsters of volatility outside of a few aberrant scenarios. So 33 isn't bad out there, even though it's come off a little bit, off about 1.1 points out there this week. Let's go on out to the skew. Let's see what's lighting it up. Now, the ags have always been fascinating to watch from a skew perspective. Soybeans, corn, wheat, I don't care where you're hanging your hat. They always have interesting moves and evolutions in the skew. Let's see what's lighting it up this week. And looks like we got a similar development here this week. Last week, the puts were pretty cheap. They were 7.6% cheap to the at the money. This week, getting a little bit more of a bid. They're 3.8% cheap. So pretty much getting cut in half from a premium perspective, at least from premium percent over the at the money vol. Calls last week were where the action was. They were nearly 10% rich. The at the money 9.5%. This week, 4.3% rich. I encourage you, if you're interested in such things, listeners, check out the shifting and the sliding tool over there as well. If you have access to the premium tools, it'll break down how much we actually moved along the skew curve versus how much that skew curve actually shifted and changed. And we did get a little bit of shift, a decent amount of shift out here this week because, as we said, the corn is moving. It was up 7.4% since our last show and up about 7.61% since the start of this week, since Monday. So a big move to the upside, probably also why we're seeing those calls come in a little bit. We blew through some strikes to the upside, folks taking those off, readjusting. So that's a traditional type of swing we're seeing in the skew curve there. Puts getting a little bit more bid, calls coming in a little bit. That makes a little bit of sense. Let's see what makes sense on the options activity front. I said we're at about a 534 even coming into showtime, listeners. And the most active contract, 500 calls out here in March, leading the dance by a pretty firm margin. I don't think I see anything else even really close to this, doing 42, almost 43,000 contracts. By the way, if you're wondering how much paper corn does on a given week, it's a pretty active contract. 1.1 million contracts on the tape so far this week. Obviously, some of that driven by what's been afoot of late, but still, you're talking 900,000 contracts in a given week usually out there. So it's an active contract, and I wish we could feature it more here on the show. The moves just haven't really been meriting it. But the 500 calls here, doing 43,000 contracts. That's more than some of the metals we can talk about later are going to do in the entire complex, just there in the 500 calls. The most active day was yesterday, 15,200, followed by Monday, 14,700, and about 6,000 and change on the tape Tuesday and today. Seems like a lot of opening paper earlier in the week on Monday, then mostly biased towards closing latter portion of the week. So a little bit of, and not surprising, again, probably breaking through that 500 strike, moving quite a bit. We moved 37, almost 38 handles, so we did break through that 500 strike this week. So maybe opening earlier in the week as we're getting towards it, then as you blow through it, some folks taking that off. Not exactly surprising paper. And number two are the 530 calls with about almost 30,000, 29,000 and change trading out there this week. The most active day was Wednesday, 13,500, followed by almost 11,000 on the tape today. Decent opening paper, I should say, on Wednesday out there. Obviously, we don't know what the deal is with today's paper, followed by the 500 put. So that 500 strike keeping a lot of the imagination of the traders out there this week with about 21,100 the big day. Wednesday as well, 13,763 on the tape. More than half of that opening. So a lot of opening paper on the 500 put strike. Again, we blow past the 500 strike. People opening on that 500 put to the downside makes a lot of sense out there. Let's look and see if we can find any interesting or aberrant or other weird prints going up out there. The 380 puts out here in July were actually surprisingly active this week, doing 17,500 this week. Not a strike you'd expect to see a lot of paper on when we're breaking through the 500 strike to the upside, but 380 puts doing a lot of paper out here this week, followed by pretty much the rest of the months were all 500 calls. That's where the action was across the board. But 380 puts, one of the few aberrant bits of paper we're seeing out there. Interesting stuff. Sean, anything surprising you in all that ag breakdown? I know you're excited to get some ags back here on the show. You're probably looking at maybe some FTSE Russell ag indexes coming up. What do you think, sir?
No, it's a great idea. You know, as I've always said, we listen to our clients, and when they ask us for things, we respond just like your listeners. But I've got nothing to add. I think it's just really interesting to see these moves and the size at this time of the year. It's really interesting to see the volumes and the movements in ags.
Since we're seeing a lot of ag movement, should we keep it in ag, sir, or should we move a foot? I'll let you choose where we hang our hat next.
Let's give another analysis in the ags. I think there's some really good volumes to talk about in moves and volatility. So let's do that, and then let's go to my favorite subject, of which you know exactly what it is. So
you're talking about dairy, Class 3 milk?
Class 3 milk. You know I've got a dairy background, so it is near and dear to my heart. But no, equities.
All right, I guess we could maybe squeeze that in a little bit later. Luckily for you, that does move and shake pretty much every week that we're talking out here, moving a couple of percent in every direction. So action-packed stuff. It's no Class 3 milk, but hey, what is? Let's set our sights next, listeners, staying in the ags zone to wheat. In particular, the more active of the two contracts got the old SRW wheat here. Even though KC wheat moved a little bit more, not as much options paper out there. You're talking, a few thousand contracts versus a couple 100,000 out here on the tape so far for the week. So obviously wheat a lot less active than corn, but still a pretty active contract, particularly when you compare it to some of the metals. Maybe we'll get to a little bit later out here. We're coming into showtime. We're at about a 670.5 on this future here in the old SRW wheat. So that puts us up about almost 5% just on this week alone, and up about 4.5% from our show last week. So an impressive week here for all things wheat. About half, 50.6% of the paper going up in this March contract out here, listeners. Let's see what's lighting it up. By the way, if you're wondering what the vol is in wheat, it's about a 30. Almost exactly, off about 2.4 points here on the week. So both corn and wheat, similar vol levels, about 33 on the corn and about 30 in the wheat. So that's kind of interesting. Let's look out here from a skew perspective. Last week, the puts were cheap, 7.8% cheap this week, 4.1%. Starting to see something a little bit similar to what we saw out there in corn. Last week, the calls, 8.1% rich. This week, 5.1%. So we're seeing an aggressive upside move puts getting bid, calls coming in. Similar story out here in wheat as we saw out there in corn. Also similar vol levels. So very interesting out here. The most active contract, like I said, we just are at the 670 strike right now, listeners. It was actually the 600 puts doing 13,500 contracts out here this week for our number one spot. The most active day was Wednesday, almost 10,000 of that 13,000 and change going up on Wednesday. A good chunk of that closing. So some folks maybe deciding the 600 strike, a bit of a bridge too far. Either way, taking it off to the downside there to the tune of nearly 14,000 contracts this week, followed by almost the exact same number of the 620 puts. So looking here, the paper doesn't really line up for a lot of verticals here. It seems like they were trading on different days. All the 600s pretty much traded almost on Wednesday, whereas the 620 puts were trading pretty evenly throughout the week. 5,500 today, 5,300 yesterday, a couple of thousand on Monday. So a pretty active week all week long for the 620 puts. Total of about 13,400, just a tick behind the 600 puts. Just looking here to see any other weird prints. You got 700 calls, also pretty active, doing about 7,500 this week. The lion's share was yesterday, 2,500. Again, a decent chunk of that closing. So interesting. Maybe as we're approaching that 700 strike, some folks taking their paper off. Looking here really quickly to see if we see any weird prints out here that were along the lines of what we saw out there in corn. And nothing really is leaping to mind unless you count these 650 calls in June, doing about 4,000 contracts. I suppose that's interesting, and the fact that these are now pretty meaty, about 20 points in the money. But outside of that, not a lot of weird paper out here in wheat. So interesting stuff afoot, though. Decent paper, decent volume, decent volatility out here in the ag. So if you're looking a little bit farther afield, you want to go, I mean, it's not really like you need to look very far for vol these days, but if you, for some reason, you want to look beyond your traditional core products of your equities and some of your metals and get beyond maybe into some other products, then maybe the ags are certainly intriguing. Certainly corn does enough paper to merit some attention. All right, now we'll hang our hats out here in our off-requested sector. Mr. Sean, it's time to talk a little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, let's do it. Let's break down equity. If we're talking equities, you also have to talk a little bit of volatility. There's a lot going on out there in the vol space. Even though net show to show hasn't been a lot of change, we see RVX still almost glued, Sean. It's kind of weird. It's kind of glued to that 30 handle. It's been there for a while, and it's pretty much there again this week. It's actually at a 29.85, so it's ticked down, a whopping 0.15 since our last show. So in that small caps, listeners, still pretty juicy, still pretty frothy, still pretty volatile. VIX cash coming at showtime is a little bit north of the 22 handle, puts it down about 2/3 of a point from where it was this time last show. VVIX coming into showtime, so the vol of vol still hovering around that 120 level, which we usually pre-pandemic used to consider pretty active. The ball was moving. Now it's kind of the floor for most of the pandemic era in terms of we expect to see it at that level. It retreated off it of late. Now it's kind of back up there again as vol is moving a little bit again. It's up nearly 8 points from our last show. And vol Q, that newest addition to the volatility landscape, aka the at-the-money vol of the NASDAQ 100, it's up about almost 1.25 points, about 25.25. Coming into showtime. Puts that VIX to RVX spread, so that small cap to large cap spread is a little bit wider than it was last show. It's about, looks like almost, not quite 8 points. Pretty darn close. About half a point wider than it was this time last show. That VIX to vol Q spread, so you're talking S&P 500 to NASDAQ. That's about 3 points. That's actually quite a bit wider than it was this time last week, nearly 2 points. Remember, comparing VIX to vol Q, one's at the money, one's got some skew components, so not quite apples to apples, but an intriguing comparison nonetheless. All right, the table is set, Sean. What is lighting up your tape? What is making headlines in the world of small caps, sir, since the last time you and I chatted?
You know, it's small caps have just continued their run. And when you bring up that volatility in RVX just kind of came down just a fraction of a tick, I'm not surprised because of the strength in small caps right now outperforming large caps. You've got year to date, you've got the Russell 2000 up 8%, 7.9%, 8%. Not to mention Russell 2000 value. It's one of the style futures contracts that also trades at CME Group, is up 8.4%. So the Russell suite of styles and the Russell 2000 index as a composite are just showing some real strong strength, and it's kind of historical, but yet it is following a pattern of which we've got some great information that has come out recently online with a blog from us, and there's more information I'm sure we'll talk about later in the show. But small caps, you've got things that are driving it, right? You've got the COVID vaccine. You've got the commitment of monetary and fiscal policy contributing. And it's a known statistic that coming out of in economic recovery times, that small caps outperform large caps historically in these time frames. So all of these various components are contributing to the momentum to the upside for small caps, and and the index is Russell 2000. So we have this incredible movement these days. But FTSE Russell did put out a blog just yesterday on the topic of the rally continuing into the new year. One of our fantastic research leaders, his name is Mark Barnes. He's head of investment research at FTSE Russell. Put out a blog yesterday on the topic of small caps outperforming large caps. And it's a quick read, but it's one of those where you get some value out of reading it. So if you go to FTSERussell.com/blogs, it's the most recent blog in the suite of blogs. So interesting times. Russell 2000 continues to rally. I think we were talking about this rotation last week on the show with John, and it's really interesting to see. It's really interesting to see. The volumes at CME have been fantastic. You've got SIBO Global launching Russell 2000 mini options in this first quarter of this year, which is very exciting. There's just a lot of momentum behind small caps, behind the Russell franchise, behind the FTSE Russell index products, and it's an exciting time. But really interesting trading times in specifically the Russell 2000.
Yeah, if you want more reading, more analysis on the Russell 2000, listeners, our buddy Mr. Eric Norland, one of the research major domos over there at CME, putting out an interesting piece right before showtime, actually. So, Sean, even if you weren't on the show, even if you weren't beaming in from the FTSE Russell studios, I have a feeling we'd be talking a lot of small caps right now, don't you?
We sure would be. And Eric Norland, he is a fantastic economist at CME Group. He puts out fantastic research, and I'm not bragging about the Russell piece today. Eric Norland's information is just incredibly valuable, so I strongly recommend everybody go to cmegroup.com and look up the Small Caps Amid Inflation Turbulence blog by Eric Norland. And whenever you have a chance to listen to him on a webinar or a presentation on the CME's website, he's just fantastic to listen to. So I couldn't encourage you more to take a look at that link on the CME website today.
Yeah, we've been lucky enough to have Eric on the show. We usually try to get him on a couple of times a year, listeners. He's obviously pretty busy cranking away on research, but we had him on recently on the show, and it's always fun to just dive deep into all the different products he sinks his teeth into. And like we said, he put out a piece right before the showtime called Trends in Small Cap Stocks Amid Inflation and Turbulence. Check it out for yourselves. It's got a lot of great charts and visuals and graphics. I'll just hit a few highlights for you now, but kind of get into what we were just talking about here, how small caps they seem to be on everybody's radar. After last year kind of languishing towards the end of last year, they turned it up to 11. People we have on our network who don't usually talk about small caps were hitting me up saying, what's going on with these small cap things? And now we're starting to see that playing out. Periods of inflation, as Eric mentions, and turbulence do seem to be particularly interesting points. And that's what he focused his research on. Since the lows in March, Russell has outperformed the S&P by 33%. A lot of that coming in the latter portion of last year. Of course, everyone expects a little bit of juice on the old inflation front, and that makes things particularly interesting because he crunched the numbers going all the way back to 1979 on the Russell 2000. And in those periods of higher inflation is when the Russell 2000 and small cap in particular really seems to outperform. So he highlights some particular periods that he thinks are noteworthy. You've got a few here. January 1979 to July of 1983. The Russell 2000 outperformed by 77% compared to the S&P. Obviously a period of, shall we say, a little bit of recession, a little bit of inflation going on during that period. November 1990 to March 1994, of course, we had the Gulf War, and then had a recession a lot of people forget about, but the early 90s was a pretty actually turbulent time and not a lot of high growth going on in certain parts of the economy. The Russell 2000 outperforming the S&P by 50% during that period. Now, here's an interesting one as well. March 1999 to March 2011. That's a long period. It said they dramatically outperformed by 116%, and during a lot of times in this period, including the tech wreck of 2001. We had the global financial crisis in that period as well, 2007 to 2009. It's kind of hard to take a decade plus worth of time and draw a lot of conclusions from it, but still, that's interesting over that period. Other periods he highlights: July 83 to October of 1990. Interesting periods. March 94 to March of 99, and March of 2014 to March of 2020. So some interesting analysis here. Again, we don't have time to break it all down. We'll fill the whole show, but check it out. Also, he points out, interesting of note, as how small caps have dramatically outperformed since the announcements of the vaccine as well. So a lot of interesting stuff. Let's see how that's equating to some paper out here. Remember, cmegroup.com/TWIFO is the place to go, listeners, for all the action out here this week. If you do that, go to equities. Pull up the small caps. That's where we're going to hang our hat in. Small caps are north of 2,000. Sean, have you been busy since our last show making our Russell 2000 at 2,000 party plan, sir?
You and I have to schedule something. I have not. I've just been really, really busy with this, with what's been going on with the new products over at SIBO and the current exciting volumes at CME. So I've been inundated with that type of work, but we have to celebrate. So let's definitely get that on the calendar.
Get it on the calendar to start planning. Meanwhile, though, folks seem to be celebrating in terms of some paper out here, Sean. Action-packed week here. Coming into showtime, small caps are at 2159 out here in the Russell 2000. And if you're saying, where is the action out here, Mark, I would tell you it is out here in the March contract it has about 63, almost 64 days to go, doing about 28% of the paper. And it's, Sean, every time we talk about small caps of late on the show, it seemed like, well, I guess you'd say leading into that period post-election, it was always far out of the money puts that we always talked about going up here on CME. These days, it seems like it's all upside, and that's the case again this week. In that March contract, it's the 2275 calls going up for a couple of thousand at a clip here, Sean, which is pretty interesting because that's not that far out of the money right now, and perhaps showing folks are still looking for, in fact, all that going up today, Sean. So a big print out there today in the 2275s in March in Russell 2000. So interesting stuff afoot here. Let's look at the vol and the skew really quickly. The vol right now, small caps, remember I said that RVX has been glued to about a 30, but that's, of course, using that VIX methodology. If we just go to the at-the-money vol of this contract in particular, it's about a 2760. It's off. Actually, it's about unched from last week, pretty much the same. So it's been hovering on these same levels out here. Skew-wise, we're looking at puts being about 17.6% rich last week. This week, 18.2%. So as we continue this rally, puts getting a little bit juicier, no real surprise there. Calls are unched. That is interesting. 11.3% last week, 11.3% this week. Cheap, both of them. So this massive block of calls didn't really change the skew out there, which is somewhat surprising, I must say. Interesting stuff afoot, things trading across the board. Sean, any of this coming across your radar, coming across your tape, or surprising you? Maybe the fact that we're still seeing continued aggregation of liquidity and paper to the upside these days as opposed to the downside. Perhaps maybe a sign of the worm turning out there, sir.
It's not surprising. We've been hearing this, and it's been a part of this rotation that we've been kind of talking about for the last few weeks into the end of last year and the beginning of this year. The upside calls are an indication of what's keeping volatility quite robust in Russell these days. So I'm not surprised at all. It's interesting to see this upside activity continuing this far, and it's it's one of those really interesting things that are going to keep us in small cap world for quite some time to come. And it's a fantastic time to be looking at the Russell 2000 as one of those fantastic investment vehicles.
Certainly is interesting. You know what else is interesting, listeners? It is the metals lighting up our dark side list here. We got 3 metals in the bottom 5. So let's get to a little bit of the old metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right. Well, he mentioned silver in that drop there, and we're going to talk silver today because it is number 3 to the dark side, off almost 6.25% this week. Silver seemed to come into its own a bit in 2020. Usually the story is all gold all the time, gold, but silver outperformed it towards the latter portion of that year, and that certainly brought it on a lot of people's radar. Coming into showtime now, we're seeing silver at about a 25.60 out there, so up nearly 4% for this week. So getting a lot of that back after net on last week's show being off about 6.25%. Remember, when we do that scan, it goes back to our show last week, whereas when you're looking at the This Week in Futures Options reports, those start from Monday. So a little bit different frame of reference in those two, which is why silver is up now, even though it's down on our report from last week. So coming into showtime, at about a 25.60. If you're wondering, by the way, how much paper goes up out there in silver, remember I said before, some of those prints like in corn doing 45,000 in one contract, it's going to be more than some of the metals complexes we're going to talk about. Well, that's the case here with silver. Silver has done a total of 27,762 contracts for the week. So less than one call out there in corn, but still interesting one. I know a lot of you have been paying attention, and certainly that number is growing over time. Let's see where the most action was. About 44% of that 27,000 contracts came in the Feb contract, looks like here. Yeah, Feb contract, 44% of the paper. The vol out there, if you're wondering, still pretty juicy, but it's come off quite a bit. 37.5 off, nearly 10 points, 9.8 points. So silver vol getting clipped quite aggressively out here. The skew last week, the puts were 1.8% cheap. This week, about the same, 1.7%. Not a lot of movement on the puts. Calls, a little bit different story. Calls were 5.2% rich. They at the money. This week, they're 4.7%. So the calls getting a little bit lower here, but not a ton of movement really on either side of the skew. Let's see where the options activity was this week. And again, you're talking smaller numbers out here, so it seems like the big dog was actually, even though we said the lion's share of the paper was out there in February, the big dog was actually April in terms of the most active contract. The 35 calls doing a whopping 759 contracts this week. So not a ton of paper on the tape here for silver, but interesting stuff. Then we go back out to February here, where we find it was the 26 calls doing 717. That makes a little bit more sense because we are threatening that 26 level out there right now. Let's look, with all the metals, we like to find some more aberrant prints out there. We got a few of those kicking out here as well in silver, going out to Dees of this year. Someone gobbling up about 300 of the 45 calls, 301 to be precise this week. So you think there's more upside in silver, perhaps? Someone else has got you back, beat you to it. The 40 calls also trading out here in July to the tune of about 300 as well. So there's some upside on the tape, even though it is in smaller numbers out here. Let's go back really quickly to these 26s. The lion's share of them traded on Tuesday of this week. It looks like most of that was closing. So throughout the week, as we've been approaching that 26 strike, it seems like folks were closing away out there in February. So there you have it, all you folks who like your metals outside of gold. A little bit of update on the silver. Sean, we got time for probably one more product before we turn our attention to the folks out there in the listening audience. So we talked on some ags, we talked equities, we talked about some metals. What else do you think should make our rundown this week, sir?
Quite a move in rates this week. Why don't we go into the Eurodollar complex and have a little chat.
All right, I think we can do that. How did I know you were going to say Eurodollars? As the old school Eurodollar folk that you are over there, listeners, of course, go on into the drop down. If you're following along with the report, listeners, go to rates, go to the Eurodollars, and then be prepared for an onslaught of quotes, because that's what's coming at you. A lot of data when you click on that Eurodollar tab over there. By the way, listeners, Eurodollars number 2 on our overall dark side list here, off 7.5%. That compares to, it was number 3 to the dark side the week before, off 2.56%. All right, there we go. Now, finally, the Eurodollars are loaded. So much data here. Remember, listeners, I always choose select all, so that makes it kind of an unwieldy beast. You can be a little bit more judicious, just go over that summary view. That'll probably do you. If you were to do what I did here, you would find that again, talk about paper here. Let's just look at how much paper. We were just talking about 27,000 contracts in silver. We're talking about a couple of 100,000. Some of the other complexes we're talking about. Corn got up to a little bit north of 1 million, so a fairly active contract. Now we're talking Eurodollars. Now we're talking the big dog, 4.2 million contracts on the tape so far this week, listeners. So pretty much pick a strike, pick a contract that's going to do more paper than silver and gold and a bunch of others maybe combined. Right now, this week, listeners, the lion's share of the action are in the March contract, going out a wee bit, going out, let's say 57 days. So let's see. By the way, coming into Showtime, we're at 99.275, if you're wondering, in this contract, if you don't watch the Eurodollars on a regular basis. What's the vol out here, listeners? By the way, once you get a little bit farther out in some of these other contracts here, the vol gets a little bit more interesting, a little bit more juicy. Typically in the rates complex, we just dove into the 10-year last week with our friend from RJO there and talking like a 3 vol. Not a lot going on out there. You got a little bit more juice in the Eurodollars to the tune of this contract coming into Showtime. It's got a lot of juice actually on the tape. About a 59. That's actually extremely volatile for a rates-oriented product. 23.5%, by the way, of that 4+ million contracts going up in this contract that has 60 days, 57 days to go out here. Again, there's a slew of contracts here, listeners. You could spend days looking at all of the various contracts out here, the different colors. And spend some time if you're going to look at Eurodollars, really sinking your teeth into. Unfortunately, we could spend the whole show on these. It's not called This Week in Eurodollars. And let's see, I said the vol was at a 59, which again explains why we saw some of those top advancing moves here from a vol perspective. We're in the Eurodollars because we saw some big moves out here from a vol perspective. Some of these are actually crazy because this contract has 1 day to go. That's probably why it says it's moving 18 vol points this week. It's a pretty impressive move, even for the Eurodollars. All right, so 23.5% of the paper here, and we're looking at the 98.875 puts are leading the dance out here this week, listeners, with a whopping, get ready for this, 309,000 contracts on the tape. So yeah, if you take that one contract, you can take almost all of the entire metals complex and put it together, and it may not add up to all of that. That's a lot of paper. So you're talking 172,000 on Monday. That was the big day. Then it got quieter for a bit. Tuesday and Wednesday, only about 11 and 17,000 respectively. Then back to today, you're talking 108,000 on the tape. If you're wondering, by the way, how much of that paper was opening on Monday, 108,000 contracts was opening there. So that's a lot of paper opening up here just on Monday. And then behind that, we've got, looks like, a bunch of other contracts, but the closest to, not much really doing 300,000+ contracts anymore. We got to go down a little bit to number 2. It's the 99 and an eighth, 99.125. I like talking in 16s and 8s again, Sean. It kind of brings you back to the old school days. 99 and an eighth doing 143,000 contracts. Lion's share was on Monday, 70,000 of those. 36,000 on Tuesday, 27,000 on Wednesday, a paltry 8,200. So there are days, listeners, when this thing doesn't do tens of thousands of contracts at a clip, just not many of them. So yeah, a lot of paper out here. Again, we could do multiple shows on this. And I know a lot of our listeners on this show particularly come in on the retail side, so Eurodollar is kind of a bit of a beast to wrap your heads around, but the numbers there are undeniable. The size is undeniable. The volume, the skew swings. In fact, did we get to the skew here? Let's do that really quickly. The skew last week, I said they were at about a 59 vol, so very juicy. 16.4% rich were the puts last week. This week, 13.7%. So the puts coming in a little bit, but still beefy, still juicy. The calls last week, 11.3% cheap. This week, 11.9%. So the calls kind of staying unched. The puts having a big move, not surprising given the fact that the number one trade by far, probably of the week across the entire CME complex, was these 98 and 7/8 puts out here doing a lot of paper to the tune of 309,000. You know what else does a lot of paper? Are your questions. So let's see if we can take a couple of them as we wrap on up with your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, let's get to it. See what you folks have on the brain with your futures options feedback. All right, let's kick it off here. Comment from Robert Brewer. Looks like he was listening to our show last week. We were talking with John from RJO about crude oil prices. And John made the comment that at those prices, the levels where we are right now, around the $50 a barrel, we're seeing fracking suddenly become viable again. And we had Robert Brewer chime in. He says, everyone can make money at $50 a barrel. I think I know what you're getting at there, Robert. Obviously, fracking is what John was talking about, but of course, there's the shale oil producers and a bunch of others over there. And that's been the topic of a lot of conversation as crude oil drifted lower. It was what point, at what price point really does it shake those producers out? That was clearly the aim of OPEC in the early drawdown there. But now at $50, you're right, it is viable for a lot of producers out there. It also raises the question for crude bulls, you know, if all the supply becomes more viable, is that going to maybe create a short-term or maybe longer-term ceiling here for crude? Interesting one to watch here, but interesting stuff nonetheless. Speaking of interesting stuff, next up we have a question from Nichols. Nichols with a Z. He wants to know, were there any surprises for you from a correlation perspective for 2020? You know, we broke this down on our year in review show, listeners, so I encourage you, go check that one out if you haven't, to see the entire year's worth of correlations. I think there were a few that stood out. Most of them were kind of what you expect. Like, you know, the strongest positive correlation was the 10-year to the 30-year at about 94%. Those kind of things are not surprising. The S&P 500 to the NASDAQ, 93%. Not a ton of surprise there. You know, 79% for WTI to heating oil. Not exactly a surprise. You know, there were ones that did surprise me, though. Like, for example, the E-mini S&P 500 to RBOB. 60% correlation. That was not exactly what I expected. That, in fact, by those numbers, the E-mini S&P 500 is almost as correlated to RBOB as WTI is. WTI was only 68% correlated to RBOB. So the S&P and WTI, both within spitting distance of the same correlation to RBOB. So that one probably surprised me. On the dark side, the negative correlations, I think I call these out on the show as well. Also, heating oil related and energy related correlations. There were some surprisingly strong negative correlations between heating oil and WTI to the yen. In particular, heating oil was 31% negatively correlated to the yen, and WTI at 27%. I have to admit, I wasn't expecting that when we crunched those numbers as well. And also, a lot of people out there on the crypto front we're expecting kind of no correlation for that asset. So you can maybe take any of these numbers as being surprising. The strength of the NASDAQ and S&P 500 correlation to Bitcoin was maybe a little bit surprising to folks. It was about 40%. Silver was also at about 39% out there. Gold is one everyone talks about all the time. That was 36%. And then you got things like RBOB, again, 36% correlated to Bitcoin. So this notion, again, that Bitcoin is this absurdly uncorrelated asset class, I think we saw that, the lie put to that last year, in particular some of those tumultuous periods like in March when everyone sold everything, including Bitcoin. It dropped 30-odd% in a single day because people needed to get access to liquidity and they sold everything they had. And so Bitcoin gets caught up in that. It's not different people who are trading it these days. It's some of the same funds that have all of it. So that's something to watch if you're looking at some of these quote-unquote inversely or negatively correlated or maybe not correlated assets and you think they're going to protect you in these periods of drawdown. Look at these numbers again. 2020 was an important year for this, and these are the years when you need these correlations to stand firm and be reliable, and they were anything but this year. So we've joked about it before, but we actually had it as one of our takeaways for our lessons from 2020 for our Options Bootcamp show this week. But effectively, one of the main lessons for 2020 was if you want true, demonstrable, you can go to the bank with it, inverse correlation, hedging protection, a put is pretty much the only game in town. That's the only thing that's going to be contractually certified and obligated to give you that. Everything else, it's a crapshoot what you get. And when you need it, it probably won't be there. I don't know, Sean, we talked about these before. I mentioned some of these. Did any of these, correlations stand out? Or maybe do you have in your back pocket any strange or aberrant small cap correlations that I don't even know about, sir, that you want to surprise us with? Anything resonating with you on these, sir?
I'm just interested in just hearing more, and as time goes on, the whole digital asset space and Bitcoin in particular, I'm just really intrigued by one, it as an asset class, and two, as a investment vehicle and as a trading vehicle. But I'm also interested in the correlations that are mentioned here. So it's going to be interesting to watch. It's going to be interesting to learn. The economists at CME Group are probably going to do a really good job of doing some really cool analysis coming up. And I'm not saying that I know anything, but I just know that it's interesting space. The highs have been incredible, and it's going to be an interesting one to watch this year, 2021. But again, I always revert back to equities. It's always interesting to see what is the correlation between the rally in equities and how it correlates to the other markets. So if anything, those are the areas. And of course, you have some fundamental correlations between interest rates and equities. But when it comes to other asset classes and equities, it's always really interesting to see.
Since you invoked Bitcoin, sir, we'll wrap it up with this one. This is our frequent questioner, Rhythmic Angel. I'll let him have one more here on the show this week. Why not? He wants to know, he says, hello, Mark. Thanks for answering my questions last time regarding the DOM. He wrote in about the depth of market last week. He said, my question this week is on Bitcoin, on CME, just what you were just talking about there. Sean, the open interest volume for this product is significantly low. Even if the total notional is considered for a product that is in the news every day, there is not much of a participation. Would you agree? I'm comparing this to products like WTI. I understand the specs are different, but even normalizing looking at the net notionals perhaps does not really show much of a participation. Are most market makers not offering this product to clients because there is no liquidity for the hedge? Thanks again. Well, I'm looking at it right now. Actually, ironically, this is a situation where the hedge, a.k.a. the future, does a lot more paper. The futures on CME have been doing a lot of paper for a while, 20-plus thousand contracts a day, some days out there. So the future is certainly active. So I don't think that's the question, where they can't get liquidity to hedge it. Hence, the markets are wide. It's a weird bit of tail wagging the dog where the future is more active than the options. That said, I did just pull up Bitcoin. You can do this yourselves, listeners. There is a Bitcoin section, a cryptocurrency section on our This Week in Futures Options report. And I will say, Rhythmic Angel, your question comes at an interesting time because we've been crunching these numbers since they launched, and you're talking a couple of hundred a week here or there. Last time we profiled, I think there was 250 contracts on the tape, so not a lot This week, we got already over 1,055. So roughly 3 to 4x what we've been seeing out there of late. So that is perhaps a sign. Maybe your question is the inflection point, Mr. Angel, or perhaps Mrs. Angel, that maybe we're starting to see this, because you're right. The mind share is there. What's been lacking for this one is it is beefy. And so it's going to require an institutional player to come use it. And the institutions didn't really give a crap about Bitcoin until about a few months ago. All of a sudden, they started saying, hey, you might want to start playing out there again. And that's kind of opened the floodgates to a lot of paper, including this week. I said over 1,000 contracts on the tape. Bitcoin, by the way, right now, just back over the 40,100 as of a few minutes ago. So getting back all that level that it lost and then some here. Almost. It got to almost 42,000, but still pretty close to it. Let's see. 35,000 call was the most active this week with 699. That's a lot, listeners. If you've been watching this contract, listening to our crypto rundown program, talking a couple of contracts someday. So to see 600, almost 700 of anything trading is a ton. And they did 359 yesterday, 340 today. So maybe putting them on, taking them off, maybe flipping them. But either way, they were pretty active out there. So over 1,055 contracts on the tape. By the way, if you're wondering, a 148.18 is where that at the money vol is right now. So still around a 150. So extraordinarily volatile. The skew, the puts were, let's see, the most active month, by the way, is the Jan contract with about 81% of that paper, of that 35,000 calls, pretty much all of it. The puts were 2.4% cheap last week. This week, 8.1% cheap. So puts getting cheaper. And the calls were super bid last week. I think it was a technical term. 31.4% rich this week, only 12.9%. So interesting paper. Maybe some of those calls going up and then coming off again. But either way, maybe Mr. or Mrs. Angel, maybe this is the inflection point where we're going to start seeing a little bit more paper out here in the Bitcoin options over there at CME. All right, that's going to do it for this week in futures options. Remember, if you want to learn more about any of these products we're talking about, check out Eric's research or follow along with your own reports. You know where to go. CMEgroup.com/TWIFO will get you to our reports, or just click on the education tab to get to Eric's research. You also got a link to a cool show over there called TWIFO. If you are indeed so inclined, want to hear some back episodes, you can find them over there, wherever you listen to your finer podcasts. Remember, if you like what you hear, we appreciate you throwing a review our way. It does help new folks discover the content in these troubled times. And Mr. Sean, if folks are interested in small caps, and spoiler alert, there are a heck of a lot of people interested in small caps right now. You pretty much are in the catbird seat right now, so everybody wants to talk small caps. So if they want to learn more, maybe get some research, maybe get their hands on a webinar, where should they go? What should they do, sir?
You can just go to the FTSERussell.com website /blogs, FTSERussell.com/webinars. So those are the quick links to get you to the menu of some really fantastic information on small caps. Our global index products are there. Some global looks at what the economy here in the U.S. is doing in relation to the rest of the world. How the rest of the world is dealing with our economy. FTSERussell.com has just a wealth of very valuable information that can, help your trading decisions, help your investing decisions. It's just a fantastic place. And the second place to go is CMEgroup.com for the most recent webinar paper that we talked about. Eric Norland has just put out today. Fantastic information there. And also CBOE.com. Go there and take a look at the new FTSE Russell 2000 mini options that are going to be launched in this first quarter. We're very excited about this launch. It's going to be really interesting to see. And again, those contracts are hedged with CME Russell 2000 minis and micro futures. So there's plenty of information on all three of our websites and our partners' websites. So, and if you need anything else, just email me, sean.smith@lseg.com. Mark, thanks for having me today.
It was fun having you beam in from the FTSE Russell studios. Check them out over there, listeners. FTSERussell.com is the place to go for all that data Sean mentioned and a whole bunch more. Give them a follow on the old Twitters as well, at FTSE Russell, FTSE Russell. is the place to go for data, tweets, insight, analysis in between episodes of this show. And if you want more in your ear holes, don't worry, we'll be back tomorrow. Volatility Views at its usual time, noon Central, 1 p.m. Eastern. Then we're off on Monday, so no crypto rundown, no option block for the holiday here in the U.S., listeners. But we're back again, Interview Tuesday, Education Wednesday, all the way through to Thursday, and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.